Imagine this. You're riding high. It's 2025, and the software company JFrog is an absolute darling on Wall Street. Its stock has shot up over 112%. I mean, it seems like nothing can stop it. And then, in a single day, it all comes crashing down.
February 21st, 2026. Investors just stared at their screens as JFrog's stock went into a complete freefall. It ended the day down almost 25%, a quarter of its value, just gone. Now, a loss that huge, that fast, it doesn't just hit one company. It sends a tremor through the entire tech world.
So how does that even happen? How does a company that was one of the hottest stocks just a few months before suddenly fall off a cliff? There was no giant data breach, no terrible earnings report, so what gives? Okay, let's dive into this. We're going to unravel that mystery. Welcome to everything you need to know about finance. Just a quick note before we get started, this is a deep dive for informational purposes and it is not financial advice. And hey, if you find this kind of content interesting, please like and subscribe so you don't miss our next explainer. All right, so to figure out what really went down, you have to start like a detective. You got to rule out the usual suspects first. A stock crash this big normally leaves a pretty obvious trail of clues. So we started digging.
And you know what? This is where the story gets really weird. A bad earnings report? Not even close. Their Q4 revenue was actually up a really healthy 25% year over year. What about a massive service outage? Nope. All systems were humming along just fine. We even looked into some insider selling from the CTO, but that was just part of a pre-scheduled plan. Totally normal stuff that wouldn't spook anyone. So the bottom line? None of the usual culprits fit the crime.
And that tells you everything you need to know. The problem wasn't coming from inside JFrog. The company itself was solid. This shockwave came from the outside. Something brand new had just entered the arena.
And that something was a seriously disruptive new technology from a huge player in the AI space. You see, the market wasn't reacting to what JFrog did. It was reacting to what this new AI could do.
The technology that sent Wall Street into a complete panic is called Claude Code Security. It's a new tool from the AI company Anthropic. And this wasn't just another competitor. This was a totally different kind of threat.
Now, to really get why everyone freaked out, you have to understand this term, agentic AI. This isn't your everyday AI that just gives you some suggestions. No, this is an AI that can actually do things. Think of it like a self-driving car for cybersecurity, an autonomous digital security expert that can scan, analyze, and even patch complicated code all by itself. And this is what makes Claude Code Security so incredibly powerful. It doesn't just point out a problem and walk away. It scans the code, explains exactly what's wrong, writes the new code to fix it, and then, with a single click from a human, it implements the fix. That level of automation, from start to finish, is what made so many existing software tools suddenly feel, well, a bit obsolete.
And that feeling, that sense of sudden obsolescence, is exactly what spooked the market. This wasn't just about a cool new feature. It was about a fundamental, ground-shaking shift in how software security might work from now on. This sell-off was fueled by this idea called the AI replacement fear. The anxiety was pretty simple. Could an AI this powerful make specialized tools from companies like JFrog totally redundant? I mean, why would you pay a premium for a dedicated tool if a general AI can do a good enough job for a fraction of the cost? That question struck right at the heart of the business model for countless software companies.
And this fear wasn't contained to just JFrog. Oh no, it spread like wildfire across the whole cybersecurity sector. While JFrog definitely took the biggest hit, other big names like Varonis and SentinelOne also saw their stocks tumble. It was like the market was punishing any company that looked like it was standing in the path of this new AI bulldozer.
But you know, even in the middle of a full-blown panic, there are always some cooler heads. The market's gut reaction was to scream, "It's over, they're obsolete!" But a lot of seasoned analysts saw it very differently. They argued that a tool like Claude was way more likely to complement big enterprise-level solutions, not just replace them, at least not overnight.
The investment bank Raymond James said it pretty bluntly. They called the stock's massive drop exaggerated. They basically saw this as a short-term scare, not some fatal blow to JFrog's entire business, and they believed the company was in a great position to adapt. And they weren't the only ones. In the days right after the crash, other major firms basically doubled down on their support. Both Stifel and Canaccord Genuity maintained their buy ratings on the stock. That sent a really clear signal to the market. Hey, everyone, calm down.
The panic is an overreaction. The company's fundamentals are still solid.
So, what's the big takeaway from all this? Well, this whole event wasn't just about one company having a really bad day. It was a warning shot, a preview of the kind of volatility and pure uncertainty that AI is bringing to the entire tech industry.
Just think about this wild ride. In 2025, JFrog is on top of the world with a 112% gain. Then, you fast forward to late February 2026, and the stock is down almost 40% for the year after that final plunge. It's the perfect example of just how fast market sentiment can flip in the age of AI.
So this leaves us with two completely different stories fighting it out. The bull case, the optimistic view, argues that JFrog's core business is strong and that AI will eventually become a tool that improves its platform, not replaces it. But the bear case, the pessimistic one, is all about the fear of massive AI disruption and the powerful, sometimes irrational force of market panic.
Which brings us to the ultimate question here. The story of JFrog's 25% drop isn't really about a stock chart. It's a sneak peek into a new reality, where a single AI announcement can wipe out billions of dollars in market value in a matter of hours. So what do you think? Was this just a temporary hysterical overreaction, or was it the first tremor of a massive AI-driven earthquake that's about to reshape the entire software industry? For companies like JFrog, the future is all about turning this massive threat into an opportunity. Which side wins out, the bull or the bear, could seriously define the next decade of tech. To see more deep dives just like this one, try out our latest episodes.